Are you trading stocks with a small account? It's harder than it looks, but the good news is we've all had to do it. If you're wondering how to trade stocks with a small account and then leverage it into a big account, the good news is there is a way, and that is the subject of this video. Alright, this is going to be a short video about what I would do if I was trading with a small account. Now, what would I do? Well, it's pretty easy because if you've been in trading for any length of time, I think that probably all of us small retail traders, that we've all been there. We started there. We've had a small amount of money that we hope to kind of leverage up and have a decent sized trading account. And so, obviously, if you've got skin in the game, first thing is have some money. But you also want to look for low price stocks with potential. And that's usually stocks that are around $15 to $20 a share. The reason being is a lot of these are, kind of past the startup phase. They've kind of matured a bit. They have a unique product or service in the marketplace, and their earnings are starting to kind of level up. And they're building an infrastructure to be able to support doing more business. Now, you have to spend some time. It's like panning for gold, like in 1849, during the gold rush in California. That's kind of what you're doing here. But fortunately, it's not quite as hard as what you would first might think, thanks to a lot in part to the internet. But without getting too heavy into this point, first of all, that's where you would start. And I'd look for neglected sectors. There was a time where the oil sector was not really well thought of. It was looked as a dying industry. It was a commodity-driven business, which it was. But then all of a sudden, the underlying fundamentals to the market changed. And then it went on this massive run-up and everything, and fracking was everywhere. And, all of a sudden, the Saudis jumped in, and, they started putting out a lot of cheap oil, and then it crashed. And so now it's on the downside again. But there is a possibility it's going to go up again. You just have to kind of keep it in the back of your mind and keep checking it out. And if you catch that trend early, like if you had back when oil first took off, you would have made a lot of money. Same thing with gold. Gold kind of is very cyclical. But if you go back and look at the early part of the 21st century, it was really trading around maybe $300 or $400 an ounce. And over time, it's just kind of gone up. And it was as high as, I think, like $2,000 an ounce. Now, at the time of this recording, gold is looking like it's firming up again because there's so much uncertainty right now in the international banking community. So that might be a place to start looking for opportunities. So basically, the sectors that nobody's talking about, that's where you should start looking. You want to be a contrarian. You want to hate what other people love and love what other people hate. If you do that, then you find opportunity. The whole part of when you don't have a big trading account is to catch a big move early on, and you do that by looking where no one else is looking. And of course, I've mentioned earnings. You want to look for really high earnings that are 30% plus from quarter to quarter and 25% or greater year over year. And there's some other fundamental factors, but Wall Street lives and dies based on earnings. So use that as a good guideline. And, of course, you want to use strong technical factors. Primarily you want to look for new highs and rising volume. When you look for low-price stocks to begin with, typically they're trading under 50,000 shares daily. But when you start to see that the 20-day moving average for volume is getting higher, then that's when you need to take notice, especially if it's trading close to or starting to approach a new high. When it does, that means the stock is under accumulation. The institutional traders are going ahead and buying into it, and the big volume spikes that you see, those are the footprints in the sand. So start looking for these technical factors and, look at fundamental factors to get your attention, use technical factors to time your entries. And most importantly, be selective. You don't have to buy every stock because it's a low price or high earnings. Let a stock prove itself. That's why you need to study price action, and you need to work at understanding the market, because price action is the fundamental cornerstone of everything that goes on in all of your trade decisions in the market. So let's just kind of look at a few notes. This is going to be for traders with accounts of around 10,000 and under. Remain flexible. It's hard to make money when you don't have a lot of money. But, if you can make money with a little bit, then you can make money with a lot. And look for stocks that match your financial situation. It has to be compatible overall. That's why I say look for stocks that are anywhere from around $15 to $20. Now, don't look at that as law. Use it as a guideline. But, when you see a stock that's improving fundamentally and it's starting to increase in volume and has good technical factors, more importantly, it's probably in a neglected area where nobody's looking at, then if you catch a stock leader or an emerging trend early on, then you have the chance to make a lot of money and grow your account. Good trading. Hey, thanks for watching my video. If you like what you saw and you got something out of it, please do me a favor and give me a thumbs up below. And if you have questions or comments, then please leave them below. Now go and click the red click here icon in the lower right hand side of the screen in front of you and subscribe. Once you subscribe, you'll get all my notifications of new videos containing trading tips, market insights, and techniques to help you achieve greater success in the market and become a better trader. Thanks again for watching, and I'll see you in the next video.